Hello and welcome to Pura's weekly trading digest. Let's start with a brief overview of what was happening this week in our commodities markets. The ending week has been featured by yet another episode of strengthening of the US dollar, which temporarily halted price rallies in many contracts. First of all, wheat and corn. However, that doesn't seem to be the end of the price cycle for both. Many soft ignored the currency factor and kept moving higher, especially coffee and cocoa. Weather conditions and geopolitical concerns remain the top consideration, prompting planting delays across the entire northern hemisphere and, as a result, having many forecasters to downgrade their 2023-2024 crop outlook so far. Wheat. The last trade day of the week before the long Easter weekend had underscored even more weakness of the US soft red winter SRW, but stronger hard red wheat contracts. The Chicago wheat futures market ended the midweek session 8 1/4 to 9 1/4 cents lower. For May, that was 7 cents off the last trading day's low. The hard red wheat ended with double-digit losses. KC wheat price were down by 11 to 14 3/4 cents, while hard red spring MGE wheat shed 15 to 16 cents. Ahead of the weekly export sales report, traders are looking for between 100,000 and 300,000 MT of old crop wheat business. New crop sales are expected to be below 250,000 MT, again outlining the disconnect of the price patterns from fundamentals. Wet weather in the southern reaches of the US crop belt and heavy snow in North and South Dakotas and Minnesota could delay planting in the coming weeks. Corn. Weekly corn prices started lower and mostly persisted through the final session of the week. Markets are closed on Good Friday, April 7th. Old crop futures were down half to 1 cent, while new crop futures were up half to 3/4 of a cent. Meanwhile, US Department of Agriculture (USDA) weekly export sales report forecasts sales of old corn yield between 800,000 metric tons and 1.5 MMT, lower than initially estimated. New crop reservations are estimated at just under 250,000 tons. Soybeans. During the shortened week, Chicago soybean futures were largely supported by bullish planting and stocks reports issued by USDA. The US government projected 2023 soybean plantings at 87.5 million acres, up only slightly from 2022 and near the low end of estimates. The USDA also reported that March 1 soy stocks at 1.685 billion bushels, down 13% from a year ago. However, soybeans are now closely watched by agronomists for another big reason. Some initially healthy soybean fields started to perish right before their eyes, just months before harvest from sudden death syndrome (SDS). The disease is consistently rated one of the most damaging to US soybeans, reducing yields by up to 25%. Disease life cycle. The fungal disease starts soon after planting, rotting the roots but not causing obvious harm to the plant. Symptoms can go undetected until the plant reaches the reproductive stage, when toxins produced by the fungus move to the leaves. We are also monitoring the situation. Cotton. Cotton ended the second straight week stronger, while trading with triple-digit gains ahead of the weekly USDA export sales report. The Outlook A index was back down by another 50 points to 96.25 on April 4th. The adjusted world price AWP for cotton was 67.84 cents per pound during the last trading day of this week. On Wednesday morning, cotton suddenly slumped, giving back all of the overnight gains. By the closing bell, most contracts were mixed to within 20 points higher than the previous close. July and December were lower, while the spot month and deferred 2023 contracts were in the black for the day. Summary and forecast. Due to the rising inflationary expectations along with substantially more downbeat outlook provided by many top investment banks such as B of A apparently affected themselves by the ongoing banking crisis. The majority of grains and softs keep appreciating. During this week, we have seen monthly highs in cocoa, coffee and orange juice concentrate. The weekly report also unveiled similar pricing patterns in corn, soybeans, and even cotton. Among grains, the relatively quiet picture can only be observed in the rice and oats contracts. The situation with the recently reported sudden death syndrome (SDS) in soybeans will most likely dominate next week's agricultural business news headlines.